All right, guys, welcome and good morning. Sorry, I'm a little late getting started. Apologize for that. Looks like a couple people are still working their way in. All right, so welcome to the Hurley Investments Trade Findings and Adjustments of March 18th. It's not a bad morning. It's certainly better than it was. Markets come back a little bit. Let's update this chart. Last night, the futures were looking very positive, and then for whatever reason, the 10-year yield rate jumped up, and everything kind of stank this morning. Stocks came down, and it's kind of leveled off and come back a little bit. I think everyone here was with me Tuesday. So I kind of just want to follow up a little bit. Obviously, we talked about what would happen Wednesday, which is now yesterday, on the FOMC meeting, which was basically what we talked about it would be. And that's that the Fed is going to hold pat and won't look at raising rates for another couple years, and everything kind of finished higher Wednesday from that news, especially. So it's a bit of a surprise to see the 10-year yield jump up again overnight. And a little bit silly. Not sure really what to say about it. But either way, it's kind of affecting things, of course, this morning. So Tuesday, we talked a little bit about a couple new stocks. Abraham, you asked a question on what new stocks are we looking at. I'll follow up a little bit with that. So what else is going on this morning? We've got the initial claims. Initial claims were lower. Or I guess, as it were, higher, which means more jobless claims. But from what I've seen in charts, it's just kind of in a range. Why would there be more jobless claims? What do you guys think? Let me pose the question to you. Give it a shot. And at this point, your guess is pretty much as good as mine. I'll be honest. Rich, more companies finding they can no longer make it or need to cut back. Yeah, that could definitely be part of it. But we did just have another ridiculous amount of money put back in, not back, but put into the system. We are having states open up more and more. So just for perspective, it's not a huge jump out of the average of the last, months, a couple months. All right, Abraham says credit will be more costly with higher interest rates to run businesses, so it will affect employment. That's a good thought as well, Abraham. I think we've talked on and off about these yields going up affecting the more debt-laden tech companies, which is why you see the NASDAQ pull back more and Apple pull back more on these days where the yield tends to go up, but it does fluctuate, and they're buying crap all the time, taking loans, or buying, taking out loans and stuff all the time. It's constantly changing. Higher yields. Let's talk about credit's more costly. Shouldn't that help Visa, Abraham? Why the crap is Visa down? We've got the stimulus payments going into people, which will increase consumer spending, a little higher credit rates. I don't think it's high enough to make the consumer worried about using their credit cards. I do think part of the reason of this run up you see from 215 all the way up to 225, 226 intraday 7 has to do with that. They can make more on a little more interest, and stimulus payments are encouraging people to spend money. Visa should be a big beneficiary, but that doesn't explain why the heck they're down today. That doesn't make any sense. So here are some of my thoughts, just to go back to my question. I do think higher regulation and Democrats' policies and all the things that go along with that definitely hurt job growth. So it's not surprising that maybe we get one of these days where initial claims go up, but it's certainly not a trend yet to follow. You got the pipeline businesses that are being shut down. Businesses are also preparing for a higher minimum wage hike along with taxes to kind of go along with what you're saying, Abraham, with businesses. So let me write this out. Businesses maybe preparing for higher minimum wage hike and higher taxes. Oil pipeline shut down. Higher regulation. Those are some thoughts. Again, it's just 1 week. We don't have a trend yet. Not to say that it couldn't be the beginning of it, but there's obviously nothing to react on yet. What might be some economic numbers to continue to look at? To keep an eye on. I'm keeping my eye on consumer spending, consumer income, productivity, GDP, new home sales, hourly earnings, which is part of average work week. These are all going to kind of, I'm probably missing one or two, but off the top of my head, these are ones that we got to keep our eyes on, because the infusion of cash will go quite a ways, I would think. They're still not even done spending the money from the bill before. But at some point, things are going to have to, or most likely will take a hit. There will be at some point less hiring. I don't know if we'll get back to the point that we were in full employment of 18 and 19, just because not only because of the businesses that never will come back, but just because, frankly, we have a Democrat in office and Democrat leadership through all legislative branches. And I don't think that we're going to get to the place that we were when there was regulation being slashed, those pipeline jobs coming in, stuff like that. I'd be surprised. I do think we have, my opinion is that we do have a ways to go, and I think that continuing to reopen will definitely help a lot of businesses to hire and come back online. But at some point, something will change. So I'm keeping my eye on these things. So because of that, a little advice is, if you maybe were worried or a little confused about this morning, seeing the markets down, seeing Apple drop, etc., and so forth. The one suggestion that I could make is, let's keep our eyes longer term. And getting a question here. Yeah, Rich, let me come back to that before we end. I did want to talk about the Boeing leap call, a couple other things. But real quick, I think with what's happening on the interest rate, the 10-year yield, seeing the tech stocks that were fabulous last year kind of struggle because of the 10-year, I think we just need to chill out and keep our eyes longer term and keep our eyes on some of these important economic numbers that are going to be better indicators of what's going on and what and how we need to adjust. So that's my big tip for the day. I'll say keep our eyes longer term and not get stuck in the weeds. So the Boeing leap call, I had mentioned we had put some new money to work for clients' accounts in a Boeing 275 400 bull leap call strategy. I like this. I think it's worth doing, especially if you have no Boeing positions. If you do, then I would just ignore this. And let me just put the basic information here. 275, 400. I think I said something stupid like it had 225 upside. Obviously, I misspoke. 125. But still awesome. So 275 January 23s. Those were 456. Obviously, we're not going to get that today, so I'll just put our numbers here, which still look good. Going to be a little more expensive, but that's okay. 59.85. January 23, 400. Strike. Short call for 27.55. So you do get a little more credit as well. But Boeing, as I talked about yesterday, still has plenty of room to grow to get back up to pre-pandemic levels. They've had some more buying of the 737 MAX, which is all positive. Facebook, we talked about, I'll take that off. New stocks, Abraham, this is for you. Let's see, I mentioned Alaska Airlines, talked a little bit about that already. That was already back to pre-pandemic levels, but again, as travel starts to come back online more and more, their numbers will continue to be easy to beat for a while, and could certainly go higher. Talked about MRO. I don't think I need to go more into that one. Let me think. Couple we didn't talk about were Carnival cruise lines. You see them come back quite a bit, but let's go back 3 years. I guess we didn't need to go back that far, but pre-pandemic up at 41 at the lows, had this sideways range up to 50. So tons of room for Carnival to come back, travel again. Same idea with the airlines. This looks like a little better opportunity since it hasn't gotten back to where it was. But their numbers again will be so much easier to beat on their earnings as they get back to work. The other one I missed was Walmart. Walmart. It's really mostly a stimulus. I wish I could just spell correctly the first time, but you know, trying to talk and type at the same time. What can you do? Stimulus. Stimulus will increase consumer spending, and Walmart is a place that a lot of that will probably go. So there we go. Couple we're still looking at. But man, again, we still have so much opportunity in Boeing and even Baidu, which has come back down. You go back to 6 months here. The trick with Baidu at the moment, excuse me, hopefully I didn't burst your eardrums. Trick with Baidu at the moment is, when is the point do we pull off protection we have up at 320? Add shares and keep going. That is a tricky question. We do have a nice building of support here on the 50-day. But this is one that we're kind of looking at right now, and Kevin and I are going back and forth, and you know, it got all the way down to 227. It's just at a period where, you know, it could go either way, but it does look more positive that it's kind of slowing down and sitting around that 50-day. So the question now is, when do we cash in the protection, add shares? Do we roll the puts down to at the money around 272? Do we add a roll and a purchase of shares and a bear put to continue to protect? Those are kind of the questions I'm looking at, and we're going back and forth with, just because Baidu has been so volatile over the last couple months. Obviously wouldn't want to take protection off if you know, it has more room to go down, but it certainly is looking more positive. Rich, you asked a question about when to take profits on GE. Again, there's never a bad time to take profits, but let's look at this real quick. Going to go to, I believe this one is in Kevin's little account, one of his accounts here, GE. Oh, GM, not GE. Thanks for the correction. Let me go to GM. So let's see, GM, we have until January 22, up $600, 644. Let's open up a chart. Let's see, let's go a little further out. Definitely up past all-time highs before, or at least I'm actually not sure if it was all-time highs, but I imagine it was from after 2008 and whatnot, way back when. certainly much higher than after the pandemic or pre-pandemic. As far as GM, Rich, you're sitting at all-time highs. It's not a terrible time to take a profit, obviously. But as I look at something like this, and even something like Ford in the same industry, there's no reason why it can't continue to run. They've had to shut down factories during the pandemic. Those have come back online. All the money that's been spent by the government to keep everybody solvent through the being shut down, and everybody going out and buying cars. I don't see why it can't continue to go up at least a little while. You've got until, you've got a whole year. Why not wait and see if you can capture more of a gain? But honestly, it's either way. It's certainly on the side of taking a profit. I can totally agree with that and would even lean towards that if I were you, just because of how well this has gone and where it's gotten up to. So hopefully that helps. I know it's not an answer one way or the other really, but it's just something you got to consider with everything else you've got in your portfolio, obviously. But that's a good little run, but you have some time there. It is bullish, so I'll say you have some time to let a bullish stock run. But it is at all-time highs and certainly not even close to a bad place to take a profit. So what you paid $8 for is now worth a couple dollars higher. Good return. Guys, let's see, got another question in. What bull call spread would you do on Walmart? Walmart, I might even look towards just a leap. So up at 130, you can get as high as 150. It is kind of in no man's land. Let me get back to a 6-month here just a second. Just to get a little closer. So it's bearish. So a bull call might not be bad, just to have some hedging side to that. But I mean, you could also say the same for being able to dollar cost average with just leaps too. So Rich, to wrap this up a bit, let me just look. January 23 is probably where I would be looking. Probably something like a 140. That's tons of time and so much. It's really not an expensive leap compared to some other stocks options. You could even start with something kind of closer. You could start with something further out of the money if you're just going with a leap, and then possibly add a short one up several strike places, or you could start at the money and do something like a 135, 160. 160 gets you above that strike price and pays for about half of the long. That's something I would look at. I like the way that looks, especially since, you know, we're kind of in here, don't really know where things are going. Technically for Walmart, but I do again feel like they should get a nice tailwind from this stimulus, and it's kind of interesting that it's fallen the way it has. I imagine this was probably their earnings on the 17th. But to be honest with you, I'm going back and forth between the two options. I don't know that either one is necessarily correct. You'll make more as it comes back quicker if you have just the leap call. This one probably will be the better call for, you know, being a little more conservative if it takes longer time for it to go up. So yeah, Rich, I kind of like this one as I'm talking through it. Not bad. That's what I today at this moment is what I would be looking at. I'll even take a little picture here. And I'll add that to our page. The reason for not doing it, Rich, is just simply that it hasn't really found a bottom and it's bearish. And it wouldn't hurt to kind of figure out a more reasonable place to find a support. It might come down and try and test that 127.50. If not, then it's obviously starting to build a base there and is starting to head up a bit. But this is one I think we should come back to and continue to look at. No problem. And I think that probably does it for me to get today, guys. Unless you have any questions, any other thoughts. Next week, if I did something like this, it might change, There might be a better indication that it's found that level of support, and we just go with leap long calls and good to go. But if there's no other thoughts or questions, I think that does it for me today. Thank you guys for joining me again. And of course, it's always a pleasure. Appreciate the comments, the thoughts, the questions. Hope you guys have a nice weekend and a good rest of your Thursday and Friday. Yep, no problem, Abraham. All right, guys, thanks so much. We will see you next time. Kevin should be back Monday, and I'll probably be joining as well just to hear what he has to say, but appreciate you joining me. Take care.